All right. Hello, everybody, and welcome to Selfwealth Live, the technical analysis edition for this week here with my one of my mentors, Jason McIntosh, obviously to my left anyway. I'm not sure if he's on my left or your left, but apologies for being a little bit late. We're just working out some technical stuff on our platform here and what we use to stream. So, in all honesty, it's there's always challenges with technical stuff, but hopefully we're here now and you guys can hear us. So, hello, Rodney. Hello, Makuso, Bob, Kirby, Bryce. Welcome to the show, everyone. Welcome if there's any newbies to the show here, and if all the guys are sitting in the back and haven't said hello yet, well, hello to you guys as well. Thanks for coming week on, week out. Jace, how are you? How are you this afternoon?
Hey, Roger, I'm good. I'm all ready to go talking about some charts, what's going on. Plenty of interesting things going on too. So I think we should have an interesting session today.
Yeah, I think so. All right. So obviously we had a few technical difficulties at the start. So if we do encounter anything, just be patient with us. We're here now. I want to get straight into it, obviously. So let's just have a quick look at the disclaimer, please.
Right. So everything that we do today is general commentary only, no personal advice. And I'll just quickly put on this disclaimer that we do each week. And that just goes through that. It's all about general commentary. I'm also not part of Selfwealth. My business is motion trading. So you'll see my details and licensing at the top. And then just beneath there is all the Selfwealth information.
All right, fantastic. Thanks for that. So after that great disclaimer, I've been reminded to just let everyone know, make sure you like and subscribe on our channel or our YouTube, like the video, subscribe to our channel so you get the notifications, obviously. And if there's any comments you have, then make sure you put them in the comment box down below as well, or live chat. Obviously, we'll be able to engage on live chat as we go. So if you haven't been, obviously, we do the three main markets that we offer on the Selfwealth platform. We analyze that from an indices perspective. All right, so we'll look at the ASX 200, we'll look at the S&P 500 and the US indices, and then we'll go and have a look at the Hang Seng to start off with. All right, and then if there's any general questions around technical analysis, this shows all around the technical side of things and reading price charts and analyzing those charts. We'll answer that, and then obviously what I think most people come for now is just to get their tickers, Jace. They get their tickers analysed and they get a bit of a heads up on what the chart looks like before they look to invest or sell. So be it. So all right, let's get straight into it. It looks like that ASX is just slowly nudging higher, ever so high each week. Obviously, we've got an interest rate decision coming up. That might change it, but yeah, how's it looking?
Yeah, so let's start over here with the ASX 200. And so we had a new all-time high last week. And so the question always is, when we get to an all-time high, is should we be looking for a series of all-time highs and prices continue to move up, or is it the last push high before something to the downside happens? So just looking at what we have here on this chart. So the latest all-time high comes after this short period of consolidation that followed the previous peak. And that's a pattern. That's the pattern that we've been seeing since the December low. So if we just come back to the December low and work through this, we've really had three notable pullbacks over that last couple of months. And so the first of those pullbacks came after a strong employment report in the US. People started talking about interest rate cuts being slowed down. And then we had the Chinese AI developments, and then we had the tariff sell-off a few weeks back. And but the thing is, none of these developments attracted further selling. So we had this quick sell the headline reaction for these three periods, these three pullbacks, and then that was followed by a strong buy the dip response, taking the market up to a new high. And I think that tells us a lot about the underlying state of the market. So attempts to take prices lower are we're getting these attempts to take prices lower, prices quickly coming back, but then the bullish forces remaining in control and taking the market back higher. And this is something we often experience in bull markets. There's often something to worry about. Well, almost always there's something to worry about that people are talking about, a reason why the market needs to peak. And we've had 3 reasons to worry just in the last couple of months. And for many people, every pullback from an all-time high, it feels like it's the start of something bigger. But I think while the trend remains in place, I'm going to work on the basis that the path of least resistance remains to the upside. And this is something we've been talking about, really, Rod. So we've been talking about this for months now. And I think the benefit of the doubt, it does go to this incumbent trend, which has been in place for over a year now. The key structure I keep coming back to, it's these rising moving averages. I've got the 50-day, the 100-day moving averages. They're continuing to rise. And that's been the case since way back here in around December 2023. And the other thing we have is that the ASX 200 for most of that time has been above those rising moving averages. So that's the structure that's typically associated with bull markets. Now, this doesn't mean we should ignore risk. Doesn't mean we should go all in on the bullish theme. Even in a bull market, risk still needs to be taken seriously. There's never any certainties that markets will continue to rise. And at some point, there will be an all-time high that will be a final high before a lengthy decline. But of course, no one knows where that's going to be. So I think rather than trying to pick tops every time the market gets to some sort of high, I think the better play, it's to go with what's working. And what's been working over the last year or so has been the bullish trend. So I think backing the trend is generally more profitable than strategies that try to bet against it. And I know this all too well from experience. There's a time earlier in my career where I'd be looking for highs all the way along. But experience tells me that you make the money by staying with trends, trying to see whether a trend will extend rather than trying to pick where it's going to peak. Regarding risk, I think it's a case of making sure that your stock selections have the right setups. And that's something we talk about in the stock section later on. And also looking for good stocks with a good risk-reward profile. So you can calculate that your risk is relatively low compared to what you think the potential reward could be. And then using those strategies we talk about, like trailing stops, letting profits run when they're working, and then having that plan for exiting when prices turn down.
Fantastic. All right. Well, I mean, it's, as you say, we've been speaking about this for many weeks now. Everything is going up on the ASX at the moment, and we've just got to be cautious of obviously having our stops ready to go if it does go down on us, right? But let's have a look at the US market. Maybe I think my brain's having a few technical difficulties today, Jason, to be honest, but that's okay.
Well, hang in there, Rod. It's all okay. It's S&P 500. Well, this has seen off yet another potential catalyst for a sell-off, and this time it was just in here. It was last week. The CPI report came out, and it was that was last Wednesday. The CPI came out, and it was stronger than expected. So the market initially sold off, but then it closed the day up near its highs. So that's now the 4th potential bearish development that's been pushed aside. So we had the, might remember the false break back in, when was that? That was back in January. That was on that stronger employment report I was talking about earlier. And then, of course, those other developments like the Chinese AI and the tariffs, they're all those developments which could have sent the market lower, but really it didn't. So when a market is resilient to potentially bearish developments, it's typically a sign that the sensitivity is in the opposite direction and prices are more likely poised to move higher. I think that's kind of where we are now. Just looking at this latest price action, the S&P 500, it's been coiling up in this tight range just over the last 3 to 4 weeks. And this follows a strong rally off the January lows. You see the January low, you see the strong rally, then you get the narrow coiling price action that's been playing out since then. And the other thing which is important here is I think that it's only been a modest pullback following that strong rally from January. And when you get a modest pullback, that's a sign there's interest in buying the dip. There's buyers lining up to accumulate on the pullback. And I think this is especially telling given some of the recent headlines. So the headlines have been about which have caused this knee-jerk sell reaction, but then the buying has come in and stabilised the market, pushed high prices back up. So these modest pullbacks, for me, they suggest that the buyers are stepping up to accumulate on the dips. So that's a bullish sign. The other point is that these tight compression patterns, especially when you get the coiling above rising moving averages, they're more often than not, I find that they lead to higher prices. Well, that's at least been my experience with them. Just on the moving averages, these remain a key feature for me. Again, the 50 and 100-day moving averages, prices above those averages, and this just does remain a bullish structure. I want to have a quick look at the Nasdaq. That's interesting as well. So just looking at this, prices are just starting to break out at just in the last couple of days price action. We can just put a line across here, and you can see these previous highs, and you see this basically it's a large 2-month coiling pattern that we have for the Nasdaq. Prices are now just breaking out to the top side. I think that with this break to the top side, we've also got prices rallying off the moving averages. These pauses typically result in a lot of pent-up energy. So when you get a market that rallies, and then you get a 2-month sideways pause along the moving average, you generally get quite a bit of energy built up within these consolidations. It's a bit like a coiled up spring. So you imagine just compressing a spring. That's like what these coiling patterns are like. And then I think when they break, the odds favour that we get it. I think we get a series of new all-time highs in the Nasdaq. As always, never a time to be complacent or throwing caution to the wind. But I think despite all the reasons to worry, and as there often are, there are many, this remains a bullish environment. I think the play remains being long stocks. I think it remains actively looking for those opportunities and then using that calculated position sizing and wide trailing stops to manage risk. And I always want to know where my exits are when conditions change. But at the moment, this is for me, this is a bull market, and I'll continue to go with that trend.
Yeah, I'm just curious because there's obviously at the moment there's just all signs of being bullish markets, especially in the Western worlds, even Europe and Germany and the UK. They're booming as well, right? Do you ever look at those markets at all, Jason, and put that analysis?
Well, I was talking about the European markets on my Friday strategy session that I do each week. That was probably about a month and a half ago. And it's interesting, we just actually jump over and I'll show you what I was talking about. So this is the Euro Stocks 50. So it's a collection of 50 of the largest stocks in Europe. And it was on Friday, the 17th of January, just in here, I was talking about it because I'd been watching this sideways training pattern in the European stocks, and that had been going on since going back to April of last year. This lengthy sideways period, we had several tops to it, or several peaks, which we can get this trend line off, and then it was it was pretty much 4 weeks ago now. We got a breakout from that compression, and you can just tighten this up a little bit more, get a bit more data, and you can see we had a strong rally. This is when the Ukraine situation started to really unravel. Everyone thought Europe was going to go into a tailspin, but it didn't. We got a false breakdown, then the strong rally, consolidation period, another strong rally, consolidation period. Now we're going to break out, and we're also seeing breakouts, which we'll go on to in a moment in some of the Asian markets as well. We've got it in the US. So this bullish theme, it's not just US orientated. We're seeing it worldwide. And it's interesting because we've got all this talk of tariffs and trade wars and all these things which apparently are going to go wrong, but the markets are telling us something else. So this is why I'm not interested in picking tops. I'm interested in going with breakouts and staying with trends and just see what happens. If it all fizzles out, well, we can have an exit strategy that gets us out. But if it continues to run, despite the expectations of some, well, you're on board and you just let the trend do what it's going to do. I think that's where the money's made. And this is bullish. It's bullish what we're seeing in Europe at the moment. Then you look at the German market, that's been the standout performer in Europe. It's really been running nicely. Nice consolidation back into the moving averages in November and a breakout. Another pullback to the moving averages in December and another breakout in, this is January 17, just when I was talking about the Euro stocks in Europe generally. And this has really accelerated nicely. So at the moment, we don't have any signs of a top. We've got signs of rising highs, rising lows, which is an uptrend. So I think it's that bullish environment.
Yeah, speaking of trade wars, I see you've got the Canadian index there. What's that? Is that also going against the news headlines, or sort of going sideways? Is it?
Well, it's consolidating within an upward trend. So everything you're hearing coming out of on the news feed about 25% tariffs hitting Canada, it's not playing out with a downward trend in the market. It's been a strong upward phase. We're getting consolidation along the moving averages. Maybe there's some more consolidation to come, but at this point, the overall path of least resistance is to the upside, notwithstanding this period of sideways price action we're currently getting. You get these sideways periods within overall bullish themes. I think the bullish theme remains intact.
Fantastic. All right, let's go and have a look back into our part of the globe in Asia. Let's. And what is the Hong Kong one?
Hang Seng. I've got the Hang Seng here.
That's broken out.
And further strength over the last week. Prices are closing in on this high from last October. They are, like, if you look where prices currently are, you look where the moving averages are, they are getting somewhat stretched above the averages. As we saw last April, prices got stretched, and then last September, October, they got stretched. When prices are stretched above the moving averages, they tend to pull back. You can also see here, back in January 23, prices got stretched above the averages. The averages are a bit like gravity. They ultimately do pull things back in. So it's been a strong run. I think the odds favour we are going to get a pause in this rally, and I think the next pullback could provide a buying opportunity. So I want to see what the next pullback looks like. Do we get a choppy sideways pullback which holds on to most of the gains? That would suggest there's buying underpinning the pullback, which is bullish, or is it like some of these other rallies we've seen, like the one from last October where it went up and it really did come quickly back down. It didn't attract that immediate buying. So I want to see what the pullback looks like. Ideally, it's choppy. It's a choppy consolidation that largely goes sideways, holds onto its gains, and if we get that, well, then I think there's a potential that this rally is the real thing. And should it be the real thing, I'd expect the next dip to be supported, and then that's where we could get the buying opportunity. Having a look at the Chinese market, and this continues to lag, but prices are now back above the moving averages, which removes the vulnerability that was present when prices were consolidating below the moving averages. So that it does improve the price structure. The next step is for prices to be able to consolidate above the moving averages, and for these moving averages to really start to turn higher. That's the next step in how this structure could develop. Despite all the talk of the trade wars that we've been discussing and the impact that could have on China, the index is actually holding in fairly well. It's holding its ground. Despite what, if you just listen to the news feed and you say, look, what do you think's happening in China? You might be inclined to guess, well, it's probably not too good, but the price action isn't that bad. So that's a positive when price action is better than you think it might be. I think there's definitely a case that this is a basing period that the Chinese market's going through. I think this is one to keep an eye on. We don't have that upward momentum coming in yet, but what we're seeing in the Hang Seng could be a clue that is what may be developing over the weeks ahead.
Yeah, I think you're right there. So, all right, well, let's get on to a general question which we've got here around timeframes, and then we'll get on to our tickers because we've already got plenty to get through today. So, is all analysis best done on a daily time frame?
Not necessarily. It depends what you're doing and what your objectives are. I've spent a lot of time looking at hourly charts, 15-minute charts, even like 5-minute charts. But that's when I was trading on an intraday basis, and often would I be trading futures markets. So it depends what you're doing. If you're doing medium term on stocks, I do think daily is preferable. I might look at a weekly from time to time, but a weekly moves pretty slowly. I like for me, with what I'm doing with medium term and stocks, I think daily is a nice balance between not too fast, not too slow, not too much price action, which you'd get if you click over to an hourly chart. Uh, for a medium term trend, I think daily is the play. But there's nothing wrong with looking at those intraday timeframes if you're shorter term in your focus, or if you want to be a longer term investor, looking at a weekly chart that can be helpful too. But for me, it's mostly the daily.
Fair enough. Thanks. I hope that answered your question there, Clinton. All right, let's get on to some tickers, and let's start off. We've got plenty to get through. We'll start off with Kirby says ask for BC8.
Black Cat. So I think Black Cat is involved in gold, and it's making is that a new all-time high? No, it's not a new all-time high, but it is a new. What would that be? Um, looks like a new 4-year high. So it's been going nicely. It's a motion trader stock. Motion trader picked this one back in May 24, and this is we talk about this every week while we have wide trailing stops, because you look at these pullbacks that you get along the way. They don't look like much when you look at a chart like this in hindsight, but at the time, that's a 33% stop. If you've got a calculated volatility-based stop, these pullbacks, you can see them off, and can give you the confidence to see them off because you have that plan for when to sell. At this point, yeah, look, this remains an upward trend. Prices are above the moving averages. Moving averages are trending higher. We haven't had a retest of the 100-day moving average since back in August. It's a strong trend. It's also kind of looks like it's breaking out. It's not a clear cut trading range, but there is a period of somewhat of consolidation through this period from early December. If I had this stock, I'd be continuing to hold it. Yeah, trends nicely in place.
Okay.
And it's probably one which could you consider buying this one here? I guess you kind of could, because you could say, look, it's breaking above these previous highs. So if the stock was bought here, look, having said that, if I'm correct, then it is gold orientated. Gold is getting a bit stretched above its moving averages, and maybe there's a pullback coming in gold, which would, of course, impact a stock like this. There's all sorts of risks to consider. But with it just breaking out, a position could be taken now. A stop could be placed maybe below the 50-day moving average, which is about 17%. So a 17% stock, a 17% stop on a stock which could conceivably continue to run a lot further. It is asymmetric in nature. It's a point to consider entering this stock. My preference would be having already got in at an earlier level at these earlier breakouts and letting the profit run.
All right, let's get on to then GQG.
Recovering after a sell-off. So if I had this stock, I would have been out. This pullback would have been big enough to take out my wide trailing stop. For me, it's a little bit early to get back. Consider getting back in. I like that it's gone from below the moving averages to above. Often when a stock goes from below to above, we do get a period of consolidation, and that can set up the entry setup. So what I like, and we talk about this sort of structure a bit, is when you get this from below to above, and then you get a sideways consolidation while the moving averages turn and catch up. And it's this type of consolidation that can lead to a really nice entry setup, either buying the dip to the moving averages or buying the breakout from the trading range. Now, I don't know whether we get this type of structure. We get this type of structure a lot, but there's no guarantee it will happen on this occasion. But that's the type of price action I'd be looking for for the next consolidation if this is to turn into a bullish structure. Definitely one to watch. If I did happen to buy this rebound, if I was looking at shorter moving averages or something, and I got the rebound, I'd be happy to hold it and see how this plays out. But doing it the way I do it, doing it the way Motion Trader does it, I'd be giving it a little bit more time before getting in. But it's looking interesting. It's worth keeping an eye on.
All right, EVN.
So Evolution and Gold Stock. And just like with Black Cat, the trend is up, and it's been up for a while. Broke out of, you can see this nice consolidation into the moving averages not too long ago. That was the latest entry point. The breakout from the consolidation. It's had a strong run since then. I won't be surprised if we do see some consolidation come into this stock, let the moving averages catch up a bit. If I was long, I actually am long this stock. Had a position in this for some time, and I'm happy to keep holding it, let it keep running, let it have plenty of room to move and consolidate it when it needs to. I probably wouldn't be adding to positions at this point. I think the point to have bought or added was just back here in mid-January when it was coming out of this range, but very much a hold.
All right, the next one is AS1.
Yeah, well, this is an interesting one. It's a low price stock, 3.5 cents. So it's not the sort of one which typically turns up in my scans because the volatility of these smaller stocks trips off the volatility filter which I use. But looking at the price structure, it's nice price structure. Got this initial rally. We've got that sideways consolidation in the moving average I was speaking about just a moment ago. We've got a breakout from that pattern. It's a dip. Like if I had this one, if I'd bought this one, maybe when it started turning, the moving averages started turning higher and the price started breaking upwards in October, that was an entry point. Another entry point was around 2.8 cents to maybe 3 cents in late January, early February. I think they were entry points. I don't think I'd want to buy it at current levels just because where am I going to manage my risk? If I bought it currently and put a stop, look, I guess for a stock of this nature, 35% is probably still a reasonable sort of stop. So I guess it could be considered at current levels, but I'd probably want to be having a stop of around 35% just to give it room to move. It wouldn't be at all out of character for this stock to have a pullback back down to like say 2.99 cents thereabouts. So that would be like I don't know whether it will do that or not, but it could, and that would be my measure is not firing. There it goes. That would be a 25% pullback. So a 25% pullback would nicely fit with the price action that we're seeing. So I think to buy it at current levels, you've got to have an appropriate stop, and that's going to be back below the 50-day moving average. If I had this one, I'd be happy keeping it. I'd probably have my stop back below the 50-day moving average. I'm happy to give back a modest early gain for the chance of staying on what could be a much larger trend. Whether it happens or not, we don't know. Most trends don't become much bigger trends, but you don't need them all to be outliers. You just need a few to really run. So I'd be giving it every chance to consolidate and see if it gets going. One to watch for those who really like the lower price specky plays.
Exactly, low caps. All right, so PWN.
Yeah, no, it's just back and forth within this range. There's some momentum there at the moment, but there's nothing to say it won't turn out looking like this momentum we saw in August. It's if like, something could develop out of this stock. I don't know that it will or that it won't, but it could also just keep bumping along the bottom for some time. So the, the risk of one of the risks of buying it now is that it just continues to meander within this range. And like there's 2016 there. Like if we looked at this next year and the stock had done like such within this range, it would be like, well, that's probably not going to surprise anyone. Maybe if it were to look, it's not for me, but if someone likes it and is happy with it, I guess you can manage risk down below previous low points. But yeah, at 1.5 cents, I probably shouldn't spend too much time on it because I just don't think that's where the higher probability stocks reside. I think they tend to be at least in the double digits somewhere. The 1 and 2 centers, they just tend to be too volatile. They can quickly double and they can quickly halve, and for me, it's just not my preferred playing area.
Yeah. Maybe we can get into a little bit more of explaining that into another session around these low caps and why you don't do it, right? But obviously, looks like back in 2016, 17 would have been a better time. But right now, this one here is just like I said, meandering sideways and very low liquidity around it, right? So, all right, let's have a look at the next one. NXL, please. N for Nelly, sorry.
Yeah, well, this is just an avoid now. This was a really nice trend. It was a motion trader stock. I didn't have this one, but it was a motion trader stock back from look, I think it was back in August or something, 2023. So we got a really nice upward trend, managed with a wide trailing stop, captured a lot of the gains, but this sharp decline in January triggered the trailing stop, locked in a great profit from that initial entry point. But now it's just an avoid for me. It's rallying back towards the moving averages. We'll often see that after a big sell-off, there'll be that rebound towards the averages. Now, whether this stock is able to regain momentum from here and push above the averages, or whether it's just a case of a rally back to the averages, and then it's a case of sell the rally, we go sideways, and then this is the risk for me. This is why I don't want to be playing in this stock now. I'm more concerned that we're below the moving averages and it becomes a case of sell the rally and downward momentum becomes a theme. That may not happen. That's just the risk that I become concerned with, and that's why I'm not interested in buying at this point. For me to want to get an interest in buying it, has to get back above the moving averages, consolidate above the moving averages, and really break this sequence, this sell sequence that we're in. At the moment, I'd classify this as a rebound within a sell sequence. If I owned it and if I'd missed that initial, if my stop loss didn't trigger, and I looked at it the day after that sell off and it snapped back, I could well, and I've done this sort of thing before. I've placed a sell order back towards the moving averages just to get out. Everyone will do what they feel is best for them, but this is a stock where I'd be looking to sell into a rally rather than take a new position.
All right. Next one would be LRV.
And that's not to say this stock isn't going to recover, but I want to be in stocks that are rising above rising moving averages, not hoping that ones below moving averages turn higher again and re-engage their momentum. Sorry, what was that, Rog?
LRV.
Yep, nice upward trend. I'd be very happy staying long this stock. And this is an example of one of those smaller stocks that have come good. Like this is not a 1 cent stock, 4 to 8 cents. There's probably more participation around 4 to 8 cents. And you can see you can see a structure building in this. So you can see the goes from this period below moving averages, gets above, comes back, rallies again back to averages, rallies again back to averages. You see a sequence of higher lows and higher highs developing, and then it quickly really starts to get momentum and run. So again, why you need wide trailing stops in these stocks? Look at the pullbacks you've got to see off. We look at it on that frame. It probably doesn't look too bad. You measure it out. There's 32%. Like, looks like you look at it. Just look at it like from eye, and you go, "Oh, well, that's no big problem. Look at that. That's just a minor dip." But it's 32%. They're volatile stocks, and that's why they need plenty of room to move. You're not going to be able to stay on a stock like this with a 10 or 15 or 20% trailing stop. Got to be wide. I'm typically looking at stocks which are below the 100-day moving average, and that would have kept you in. If you had a stock below the 100-day moving average, calculated ATR or trading range stop will even be wider. If I had this one, I'd stay in it. I'd let it just keep running, see what it does. Wide trailing stop, risk giving back some profit for the potential of staying on a much larger trend. That said, it's probably a harder one to buy with it just being elevated above the moving averages. I'd probably wait for the next consolidation like we saw back in January and either buy the pullback to the averages or the rebound off it.
Okay, the next one is OPT.
Yep, trends in place above the moving averages, rising averages. It's when you see this structure, I'm typically going to say the same thing. Trends in place. I'd be happy holding it. I'm probably not buying today. There's a consolidation going on. Maybe that's got a little bit longer to play out, but I'd be watching it and see whether this turns into a viable structure. But yeah, happy to be in it. Stop below the 100-day.
All right, beautiful. VAU then.
And you can see there's still plenty of upside potential in this from where it's come from. This could be the start of a much larger rally. So I want to give it plenty of room to move around so I can participate should this be a larger rally. I don't want to try and hang on to these early gains too tightly and take a quick 20 or 30% gain because I can see the potential of this going 100%, 200%. It might not, but it's got that potential. And if I keep playing the potential of 100%, 200%, I can be pretty sure I'm going to get a few of them. And I only need a few of them, and my portfolio starts looking really good, as long as I'm also protecting my downside and I'm limiting my losses to 10, 15, 20, 25%. And then I'm getting a few 1, 2, 300%. It really starts to work. But you've got to give these stocks the potential, these stocks with a lot of potential, plenty of room to move. Or like we saw that last stock where you had that 30% pullback, you get knocked out along the way. So to save yourself from getting knocked out along the way relatively early, give them plenty of room to move and see which ones do run. Sorry, Rog, what was that next stock?
You're making good points around these stocks is important as well, right? So VAU.
Still consolidating. Like, is this starting to build again? It could be. It could be that that's the correction done, and this is sort of like the base and the turnaround. So if we were to see price action like so over the next 2-3 weeks, these moving averages keep coming up, then you've got like a potential buy the dip opportunity or a buy the breakout opportunity. So I probably wouldn't be buying just yet, but if I saw that price structure evolve over the next few weeks, it could well come into line there. It's also possible to say, look, moving averages have crossed, had a nice rally, broken above the October high. It probably does qualify as a breakout and an emerging trend. just with where prices are now, having had that initial run and paused, I'd probably say, look, now I'm looking at it and they're paused. Maybe I can just continue to look at it for a little bit longer. Maybe look, if it breaks above the February high, I'll just say, look, maybe I'll just go with the momentum now. But whilst it's below the February high, I'd probably be inclined just to see what it does over the next few weeks. If it continues to give back gains, well, great, I don't need to get in. But of course, it could give me a nice structure to get in on. And I also know that I can buy if it breaks above the February high. So there's a few different scenarios which I can see playing out, and that's probably how I'd play it.
All right, the next one is RHC.
Well, this is an easy one. It's a no, because, and I think we can probably see why. We've got the declining moving averages, and the rallies are coming back into the averages and being sold. So we have a sell the rally sequence in play. Now, could this be the final low, and could it now be staging a recovery? Well, it certainly could. That's entirely possible. But that was also the case had we looked at it in November, and we could have built the same argument in September. And I can keep scrolling back and we can keep playing that game. So the path of least resistance at the moment is down, and I think we should work on the assumption that that remains in place until we have evidence to the contrary. So whilst, yes, this could be a turning point, based on what we've seen so far, I think we work on the probability that it's not, that the trend remains lower. I'd want to see this back above the moving averages. That's step one. Then I want to see consolidation above the moving averages. Step two, moving averages start to turn higher and cross. And then from there, if we get a break higher, that becomes, for me, that would become the entry point. So I'm happy to pay more to get in later. And by being prepared to pay more, it helps me avoid situations where I buy early and end up holding a stock which continues to fall, or getting stopped out, or just basically being frustrated. This has been a no-go zone for much of the last 2-3 years, really. There've been some glimmers where maybe it was breaking high, but they didn't follow through. So I think if we just put situations like this to the side, from the ASX's 2,000 odd listings, we can eliminate maybe half or 2/3 of the market. So you can quickly put a red line through maybe 1,000 or 1,500 stocks or something, and then you narrow your field of vision down to those ones which are trading above rising moving averages, and then you look for your opportunities there. I think that's where you get the better potential ideas than trying to fight downward momentum.
All right, let's have a look at Rio then.
This has been looking really interesting. So what we've got this consolidation. So stepping back to September, we've got a low in September and a strong rally, and we've got this sideways consolidation going on, and that's within like a broader, much larger, broader trading range. I think ultimately Rio and BHP, I think ultimately they break to the top side from these big holding patterns they've been in over the last probably four years. And I like this structure Rio currently has. Moving averages are flat. It's oscillating either side of the averages at the moment. There are basically two levels to watch. We can watch the lows down here around 1390. And we can watch. I think we could probably just say let's keep an eye on the most recent high. A break either side of there, I think, gives us the next round of momentum. I favour to the upside. So yeah, keep an eye on. I've also been watching the iron ore price. I'll just quickly go over and find that and show you what I've been looking at with that. And I've got to find it here amongst 1,000 different things I keep an eye on. And here it is. So I've just been watching this. I just wonder, is this a basing structure? Like you can draw in like a head and shoulders type pattern. You could call that the head. There's your left shoulder. There's your right shoulder. This hasn't broken out, so it's just the potential. It's just got the potential of a basing pattern. But if that was a basing pattern in iron ore, and that would have break to the upside, well, then that's what maybe feeds into Rio and BHP. So it's just tentative at the moment. Something I've been watching for a while. Hasn't broken higher yet, but I think it does have those characteristics of a basing structure, and I like the price action we see in Rio. I've got some Rio. I've had it for a while. I'm happy to keep holding it. I'd consider buying some more on a break higher. Keep an eye on the other big miners too. I think resources could be an interesting play at some point.
Okay. L1M.
$0.07 stock. Do have signs of rising lows, rising highs. So if someone really likes it, wanted to have a punt, it could be bought at current levels and put a stop below that low from January. That would be, say, what would be maybe 24%. So 24% stop on an 8-cent stock is probably a pretty good result. Or alternatively, see if it breaks high, see if it makes a new high. So that would be at say probably going to be close to 10 cents. So it's buying at say 10 cents, and then if it was bought at 10 cents, again probably then looking at like a 25% stock, 25% stop. So yeah, if someone likes this stuff, likes what they do, this is the time to play it. If it were to spike higher and it's up at 15 cents, and then I'm going to say, well, look, your risk it's too risky. How do you play this? It's at 15 cents, the moving average is back at 8. I can't manage the risk effectively on it. So this is the time to consider these stocks. Whether it goes or not, I don't know. I guess the more conservative play would be to wait for the breakout rather than punting the low. But either way, it depends what you want to do. It depends how you. But I think the key is risk can be managed to a reasonable level, and lots of upside potential in these stocks should something go positively with it. So it's a structure you can play with. I think the structure has potential. So yeah, anyone who likes highly speculative stocks, have a look at that.
All right. MVP.
Sorry, Roger, what was that?
MVP. Most valuable player.
There we go. Let's see whether the stock lives up to that. Well, we've got a spike upwards. But it was a hard one to catch because it's come from below declining moving averages. I would have said, look, this isn't a stock for me. And even still, it's like it's had a run. Now it looks like it's going to get the consolidation. So I don't want to buy it at this point. Let's see what the consolidation looks like. If I'd bought some, if I was holding it at these low levels and it spiked higher, well, sure, by all means, I'd probably keep it and just have my stop loss back below the 50-day moving average. So I risk giving back most of the gain for the potential of it, this pullback stabilising and pushing higher. But I don't see an immediate trade for anyone who's not in it. It's a case. It's just got to watch what the price action looks like. Do we get a tradable pullback? See how the price action develops. They're always harder ones, and not every spike high is going to lead to something. Look, we had a spike higher back in January last year, then it gave it all back and continued lower. So it's one of those stocks which is prone to getting everyone excited who's watching it and then disappointing them. See whether this time's different, but yeah, probably not for me.
All right. The next one is BA on the New York Stock Exchange.
Yeah, so you're buying. It's been in this big trading range. You can draw it in. Just match up all these lows, and you can see a nice visual on the range. It's coming off the lower end of the range, back above the averages, pull back to the averages, sequence of rising lows. So there could be something in this. It's trading a potential. There's a potential emerging upward sequence within a broader trading range. But then there's always a possibility that if this was to extend, it's a possibility that the range ultimately breaks and you get a larger trend higher. So there is something to go with on this one. If somebody wanted to play this, I think it could be bought at current levels and just have that stop probably below the 100-day moving average, which is probably not going to be that. It's only 10%. You probably buy this with a 10% trailing stop and see whether something happens. There's probably not much downside, and we don't really have a lot of upward momentum at the moment. It's only the signs of emerging momentum, but that's how big trends start. Big trends start with emerging momentum. Just a case of working out. We only know in hindsight which emerging momentum plays turn into big trends, but it does have the basis of something there.
All right. The next one is back on the ASX, SRG.
Well, the trend has been in place. We're getting volatility today. Trend is still in place for me. I'd wide trailing stop. We can see off this sort of volatility without any trouble. At the moment, I'm classing this as just a pullback within a rising trend. Let's see how the price action develops over the next few weeks. But that wide trailing stop, should price action deteriorate, that's what would take us out. But this is a motion trader stock. I don't have this one myself, but if I did, I'd be very happy hanging on to this still and just giving it that room to move around. We see volatility like this in stocks. It's not out of character for a stock to do this. So, at this stage, it's stay with the trend.
All right, fantastic. I think we're back on the US. So this is RKLB.
Rocket Lab is an interesting one, and it's got that nice upward trajectory too. That's interesting. This is a very, very, very gettable trend. Like, you see how price goes from below the averages to above. We get the consolidation across the averages. Then we start to get a sequence of rising highs and breakouts, and so there are several points here where this stock could have been bought. There is some volatility in there, but that wider stop would probably see that type of pullback off. And even if that one got stopped out, there's still plenty more entry opportunities at good points before the trend really accelerates. So at this point, I'd certainly be holding this stock. Strong rally, consolidation in the last few weeks. It's a potential entry point for someone who wants to play by the dip. I think it probably needs a decent stop though. It probably needs look at 20%. It's probably a 25%. To buy at current levels is probably a 25% stop, because that's where my wide trailing stop would be anyway. My wide trailing stop would probably be back maybe around $18 or so. Just casting an eye on it, giving it lots of room to move. So I think the same applies if one's looking to buy it here. You could play shorter stop strategies just below the 50-day. I guess that would be okay. But yeah, certainly what I'd be holding if it was in my portfolio.
All right. Next one is PLTR.
This would be on the US as well, I think. It must be. Yep, trends up. Not much more to say. It's a lovely gettable trend. I'm just looking at the pullbacks, the consolidation in the averages. It's all textbook sort of stuff. And like look at this spike lower here. Like, we're just looking at SGR had that spiky day. There's a spiky day there, which a wide trailing, calculated trailing stop, I'm pretty sure would have seen off. So you get these movements where you can get some sharp reactions in stocks, but the wide trailing stop, it just gives them that room, and then the trends re-engage, and there hasn't really been anything else of note. So yeah, very happy I'd be holding onto this stock.
Some of those US stocks are looking good. I'll give you a break from the stock analysis. We got a general question. Do you gain any value from the fear and greed index?
Yeah. It's I like it. I like things when they're at extremes. So it's a bit like an RSI as well, kind of the fear and greed index. When something gets overbought or oversold, it's that type of index. If we're often it's when also like when, so say let me just sketch something up. So say we've got a fear and greed index type of situation, and much of the time we're sort of like bobbing along, doesn't tell you too much, but then it might get into the greed phase. The thing is, it can stay at elevated levels for a while. So just because something is in maybe the greed phase, I don't think is necessarily a sell signal. For me, the sell signal comes when you then get a break back down below a threshold. So maybe it's if 100 is the top, maybe it's a break that back down below 100, and you get that initial ending of the momentum. That can be the sign that the market's going to start coming off. Likewise on the lows, like markets can stay bombed out for a bit, but then when you get the break back above the threshold, that can be the sign. So when we're in fear stage, and then we break back above the threshold, maybe it's 10 or 15 or 20 or something like that. That can be the sign that you're getting that reversal in the indicator and the unwinding of the extreme situation. And that's when the market can start to move in the other direction. So, I don't want to preempt it by just saying, oh, look, we're in greed, market's going to fall. It can stay elevated for some time. It's when you get that reversal that things can get interesting.
All right, let's get back onto a US market stock here with ANAB.
No, because we've got that declining moving averages still. Price is getting up towards just nudging above the 50-day moving average, but it's not enough for me to say, look, this is the end of the trend. Like, what if we had done that over here? We said, oh, look, prices have come up, they nudged back above the 50-day moving average. This is all over. Let's get in, and then we find the market goes down and makes a new low. So whether that happens here or not, I don't know, but it's just an example of why I don't want to preempt a turn at this point. It's more a case of I want to see maybe it rallies a bit more, and then we get that sideways, as we've seen so many times today, sideways across the moving averages, then a break higher. For me, that's the turning point. This is a potential price action of interest, but it's not enough for me to say, yeah, this is a turn. So I'd be inclined just to leave this alone. Maybe just watch it for the time being.
Okay. All right, let's get on to APX, please.
Trend's still in place. I'd be happy holding it if I was in it. Wide trailing stops, because we've got to be able to see off these pullbacks, which we get. We always talk about. But yeah, wide trailing stop. My stop would be below the January, at least below the January low, giving it plenty of room to back and fill, go sideways before hopefully re-engaging with the upward trend, which overall remains in place. If I was thinking about buying, maybe I could buy a break above the recent highs. That would be going with momentum. And I could just watch it until then, see if we get some more sideways price action while the moving averages catch up. There could be a buy the dip opportunity, or it could be a buy the breakout if I was looking to get in.
I always have a bit of a laugh, a bit of a smile with this one here because if you've been with us since last year, we look at July last year where people was asking about this around that time, and we were just saying, or sorry, Jeff, you were saying no, not right now. That price underneath moving averages, and this is one as we've came back to week after week. And we could see the story play out, and we could see the actual price action move above the moving average, consolidate a little bit, and at points to get in, right? And now it just keeps on going up. So it's been a really good example of how a stock where you've said no to because it's been below the moving averages has turned around and become an opportunity, right? So and still is at the moment, right? So it's a good one.
It's just being patient and waiting for the right structure.
Yeah.
Just don't want to know about it when it's on the left hand side of the chart and it's below the moving averages. So when it gets above, we start to pay attention and start consider breakouts as being a potential emergence of an upward trend.
Yeah. All right, let's get on to AL3, please.
Yeah, vulnerable position here because we've got this consolidation happening below moving averages, which are crossing to the downside. So this is a stock which, which if I like, I wouldn't have got this initial move because it's come from below moving averages, and then it was stretched, so I wouldn't be involved in this part of the chart. But if I'd bought as prices were trying to regain momentum of the moving averages, I'd now I'd be closing that position out. It'd be coming back to my stop loss, or if I was using my time exit, it would have been if I'd bought around November. We're now in February. It's below where I got in, below moving averages. I'd be closing it down because the risk is when price structure is vulnerable, the risk is that you get deteriorating price structure, particularly these lower price ones where the initial excitement of the story which caused them to rise, if it starts to fade, they can really, really unwind and come back a long way. So I'd be shutting down risk with this one. It's not to say it can't stabilise and go back up, but at this stage, I've got to focus on the risk, not the upside. I'm more worried about the capital I could lose rather than what I might make if things turn out okay. I've got to worry about my capital first, so I'd be protecting my risk now.
All right, MSB.
Was that MSB?
MSB. B for Barry.
Oh, B. MSB. Trend still up, consolidating, got stretched above the moving averages. You see how far away it pulled from the averages, getting that pause and consolidation. If I was in this one, and this is a motion trader stock, so I know there's plenty of my motion trader members who are in this one. If I was in this one, I'd be happy to continue holding it. Probably wouldn't buy it just yet because it's consolidating. I just keep watching the consolidation. Maybe buy a breakout. Maybe this consolidation has a bit further in it still to run. That's probably my take on this. I think this consolidation has a bit longer to run. Maybe we do see this pullback and the 50-day being touched at some point. But I'm happy to stay with this overall momentum.
Okay. The next one's JTN.
Is that JTN, was it?
JTN. Oh, no, GTN. Sorry, GTN.
Yep, structure here is okay. Like, is this like a... So we looked at a low price stock which had similar-ish price action earlier on. I think it was like a 1.5 cent stock. So it's got this same sort of price structure, but it's a higher priced share. So is this like a big basing structure? there are signs that we do have like higher lows developing. So that's encouraging. And we can kind of see it stepping higher. So we have a big run up, then we've got a sideways, got a nice rally, then a sideways, a nice rally, then a sideways. So is that sequence going to continue? Are we going to get another run higher? My preference would probably be buying a breakout to a new high above 60, like buying it at 62 and having a stop below the 100-day moving average to see whether this stepping sequence continues, and maybe this is a basing structure which can support higher levels. I think there's potential with this stock. It looks like it's fairly thinly traded, but I think there's certainly potential there.
All right. TWD.
And potential doesn't mean, of course, that you're going to get something great from it. It just means you can see the makings of a profitable trade, and you've got to manage that risk, as we've spoken about already. And if you think, I think my upside on this trade is more than I think my downside is, and you've got an asymmetric setup, and you've got momentum, and you've got to play. So that's how I do it. So what was that, Rog?
TWD.
Well, it's not a stock I'm not excited about this stock. There is a range of sorts here. You can see it. You can see the range. So that's basically a trading range which it's in. It's not really getting much traction to the upside at the moment. If I'd bought this stock as it was starting to get some momentum, and if it was above my entry level, I'd probably keep holding and just see whether it does stabilise here and ultimately turn upwards. But yeah, I'm also mindful that a range can break either way. If this breaks to the top side, well, that's great, but it also could break down. If we get that consolidation below the moving averages and it starts to roll, well, then I wouldn't hesitate to close it out. At the moment, I could justify hanging on to this position, but we've got no momentum. This is just classic sideways trading at the moment, and it's not even that sort of momentum, not even that sideways where it's just holding above moving averages. It's really oscillating either side, so it's not really giving us a clear sign as to where this one's going. Not a stock I've really got a good feel for at the moment, I'd say. I guess the levels are watch the August low, watch the November high. I think whichever one of these breaks first probably tips the market's hand to the next notable move.
Yeah, good way to look at it. All right, let's have a look at SDV.
It was a nice trend which has really struggled of late. The one thing of interest is that it did make a new low. So you can see the low from November made a new low in January, but there wasn't that follow through selling. It wasn't like breaking a previous low and then really starting to build downward momentum. It quickly snapped back up towards the moving averages. So maybe that's saying that there is. Maybe that's saying that this is just some type of a large consolidation to this previous advance. I think this was a motion trader stock. I'm pretty sure this has already triggered the motion trader stop loss. So in that case, I'd be out. If I had bought at lower levels and I was still in, I could probably say, look, I could just now place my stop a little bit below the January low, and that would be my line in the sand to see whether this is some sort of a big zigzaggy structure which continues to go sideways and then ultimately does move higher. That's how I'd probably play this. But I would definitely be having a line in the sand. I wouldn't just keep holding, hoping that each low is going to rebound and ultimately going to go higher. I'd want to be protecting my capital on it. I wouldn't be rushing to buy this one though. It's I really don't like the price structure. These big pullbacks below the moving averages. It does, for me, weakens this structure, and I think there are other stocks which have behaved better during consolidations, which I'd prefer to own.
Okay. SMB. SWM. Sorry, SWM.
Well, it's been a no for a long time. These declining moving averages. Is that starting to change though? Possibly. We're above the moving averages. The moving averages are turning, so it does have the potential's there for a turnaround. The way I'd probably play it, I'd probably go for maybe a break above the moving averages haven't actually crossed yet. So until they cross, I'm not going to get a signal for it. But if we do see a bit more sideways and the averages do cross, maybe the way to play it would be a break up to like 18.5 or 19 thereabouts, and then having a stop back below the 100-day. Just because the stock's fallen a long way doesn't mean that it is going to go back up. A lot of the times they do, but then a lot of times they don't either. Who's to say that it can't now just bounce along the bottom in a big trading range for another 12 months or longer? So even if we get another break up, got to know your exit point, because then that could be like the top of the new range, which then just goes back and forth and just doesn't do anything exciting for a long time. So down and out doesn't mean it's going to come good, but this is also where we can get some terrific bottoming patterns as well. So worth keeping an eye on, but it's not super exciting at this point, but it is worth keeping an eye on. There could be the makings of a trade approaching.
Okay, and the last one is LYL.
Well, it had been a nice trade. This pullback would be enough to take my trailing stop out. So I'd be out of this one. Also, I could see, you can see how the price action deteriorated. We had the consolidation below moving averages, a sell down, rally back to the moving averages, then sell the rally down to another low. And this time it's managed to make its way through to the other side of the moving averages, which is encouraging that maybe a low is in place, but it's still a bit early for me. As I've said it several times through the show, in this situation, I want to watch how the next consolidation plays out. Do we get a sideways move or the moving averages turn higher, and then maybe consider buying the breakout? So one to watch. For me, it's not quite there yet, but something could develop from it. If I was in there and I owned it, if I bought this initial rally, well, then it'd be worth probably hanging on to. But yeah, look, I wouldn't rush to buy it just yet. One I'd probably prefer to watch.
Fair enough. All right, I think that's it for today, Jace. Thank you for all your commentary on those on the indices, and then obviously all those stocks from the viewers. Question from Barry around my art work. Been meaning to ask, where's my art? Well, Barry, look, I've really got to look long and hard and be patient, as Jason says. We've got to find something that's going to be much better than his, obviously. So that's the key: being patient in the markets and just making sure you buy the right painting, right? So at the right time as well. So, but it's coming soon, Barry. But thanks for asking me. Alan,
it's going to be hanging there for a long time, Rod, so you want to get it right. They say act in haste, regret at leisure. So don't hastily buy artwork, get the right one.
That's right. And this is a brand new room that I'm in here, so I've also got to run it through the boss as well. So I've got to make sure it all goes well. Alan, great topic on liquidity, and when is a stock too volatile or too illiquid? Maybe we'll talk about that in one of the coming weeks for sure. Thank you everyone for coming today. Thanks for all your comments and your tickers for us to have a look at. Please, once again, don't forget to like and subscribe, and then also comment on the video below. below. And if you have any questions for me at Selfwealth, you can always shoot an email to support@selfwealth.com.au and attention it to me, and I'll be the one answering. At the same time, if you want to try us out, you can click the link down below and get some free trades down there. And if you want to try Jason's service over at Motion Trader, then please go and check his trial out with the link below at motiontrader.com.au as well. Once again, thank you, everyone. And thanks, Jace. Thanks.
Rog, fun as always. Thanks for having me, everyone. Thanks for joining us. And yeah, I look forward to next week.
Beautiful, guys. Have a good week ahead. Stay safe, and we'll see you next week. Take care. Bye-bye.